Looking at our fixed income markets, what have we seen this week in terms of demand? I mean, traders say that the recent communiques from the central bank has reduced demand. You say we've seen it forcing some counterparties to sell their positions. So tell us a little bit more about what's happening.
Okay, what we're experiencing now is a carryover of what has been happening in the previous months. We've seen illiquidity persist, and what happens is that by the time federal allocations come in, there would have been a debit, and then by the time this money is coming, the net effect on the system is usually not so much. But we've seen a high demand for fixed income securities, especially at the short end of the curve. That's for treasury bills, despite this illiquidity. But on Wednesday, this turned around. We saw counterparties start to sell their treasury bills, especially on the 182 days level, to fund their short-term obligations. However, the 1 year maturity treasury bills, treasury bills that are close to 1 year to mature, are still very attractive. They are still at about 14.9%. That's sub 15, basically. But it's been caused majorly by the illiquidity, which is a deliberate position of the CBN. As we know, CRR was increased from 8 to 12% to keep it tight. We've seen that the CBN is really reluctant to increase the MPR rate and was trying to seek other alternatives in controlling the level.
Well, Bankole, as you said, we're seeing yields sort of rising there. Now, next week, the CBN did announce plans for a T-bill auction of 142.1 billion naira. Now, how do you see yields playing at next week auction? Last auction, we saw them at 13.94%. With them rising, what do you see them at the next auction, coming out at the next auction?
Issuing next week 142 billion will be maturing. So usually when these monies come, you find most investors trying to go back into that the auction with that money, to get yields that are more attractive. But this time around, with deposit rates climbing up very fast and the interbank rate at about 18% already, I doubt if the demand is going to be as aggressive as it had been in the last few months. And so in the last 2 weeks, we saw that the CBN had to sell OMO bills of up to 70 billion, but just 7 billion, the 10% of that was successful, showing that most counterparties that bidded for that OMO.
Well, let's talk a little bit about the Naira, Bankole. What is your outlook for the Naira? We're hearing traders saying that it may be heading for rough waters after the CBN voices concerns over falling oil prices. And of course, we're seeing dollar supplies that coming from energy companies sort of dropping. What is your take on how we'll see the Naira performing next week?
Yes, we're going to see a very, very active secondary market, that's for sure. And we're going to see that the Naira would continue to devalue, at least marginally, because what's happening right now locally, apart from the drop in oil price and drop in amount in Federal Reserve, well, the new communique that was sent out on Monday, banks coming in for the WDAS when they have tenured borrowings from the CBN. So that is going to make banks, of course, continue to borrow because of the illiquidity we've spoken about. They will shift their dollar demand to the secondary market. And so we're going to see the demand, make the Naira, cross into very close to 162 levels. That's what we anticipate, basically.
Okay, well,
higher demand for the dollars on the secondary market.
Unfortunately, we have to end it there, Bankole, but thank you so much for giving us your take on how our fixed income markets and, of course, our Naira currency is performing. That was Bankole Odusanya. He's a fixed income trader, FX trader with UBA.